You're welcome back. This is Business Morning coming to you from Channels Television. It's now time to begin our conversation for the day, which is on the new guidelines for BDCs in the country. The central bank, as we've informed you earlier on, released new guidelines for operation of FX Bureau in the country, raising the benchmark in terms of the capital base right now from 10 million naira to 35 million naira. And a lot of reactions have been coming up in that direction. We had the House of Reps last week raising its voice, and now recently the Senate as well saying that the amount is too much for the BDC operators to cope with. Okay, let's look at other information, other reactions as we have here in the studio. Wale Abi, he is the Executive Secretary of the Financial Market Dealers Association. He is here with us in the studio. Thank you, Wale, for coming.
My pleasure.
We do appreciate it. First of all, I want you to tell me what you feel about this new guideline.
Well, on a general note, I believe strongly that if you take a look at the structure of the financial market, there are regulators there, and then there are operators. And of course, there are different segments, where these operators are. And of course, the regulator exercises the right for supervision and then monitoring, and of course, coming up from time to time with guidelines, of course, with a view to achieving certain objectives, either on a short-term basis or medium-term or long-term.
Now, so do you think that the standpoint of the central bank, it's okay in raising this amount, the capital base, from 10 million to 35 million naira?
If you take a look at the industry as a whole, reforms, started years back, and it's I would say, a continuous process. And what are these reforms about? Obviously, with a view to bringing about improvement, in the different segments of the markets, and of course, with a view ultimately, to benchmark whatever we do against best practices globally. And so it's not, for me, it's something that, look, you review where you are coming from, and you take a look at your immediate environment, and you want to say, look, there's a need for us to achieve certain goals, and we need, therefore, to do a review so that we can improve the process. So I believe strongly that that's the objective of the regulator as far as this exercise is concerned. And they've been doing that in any case, starting from the banking system, the mortgage institution, the microfinance banks, and BDCs as at now. Some
comments say that this step by the central bank governor, who is just resuming office as the new governor, is quite unfair because in a speech when it came on board, he said that he's going to cut down interest rate gradually, and of course there will be no more deposit. There will be no charges in some of the banking transactions that we do. So this comes as a surprise to many people, especially the Senate.
No, it's. I mean, there was a clearly spelled out agenda, which was well articulated. However, I mean, in terms of implementation, this is something that over possibly a 4-year period, we have to see the agenda from that perspective. Some of those things might be immediate, some might not be immediate. For instance, there was a clarification that, look, in terms of looking at interest rate, for instance, I mean, they possibly will take a look at that after the election, so maybe 1 year plus from now. Because there are certain things you can't, certain goals you cannot achieve together at the same time. So spelling out the agenda is one thing, but having to now take a look at what you do on a short-term basis and a medium-term basis, these are different things. So taking a look at policy guidelines are reviewed from time to time. And if you take a look at what is possibly behind this, the foreign exchange market is a market that needs to be well regulated we are aware, of sharp practices in that market, and people talk about rent seeking, people talk about rent tripping, and and diversion of funds from the official market to the black market.
All right. I was
So
just trying to
all of those,
say that,
therefore, must have informed, this particular guideline with a view to streamlining things in that segment of the market.
as one of the players in this market, I want to believe you're also a player in, even if you still look at all the rate, the
Yes.
interbank rate,
Yes.
the FX rates, and all of that. The central bank was saying that these actions become necessary to
Yes.
halt the depletion of the foreign reserves
Yes.
and the potential for financing unauthorized transactions with foreign exchange procured from its own window.
Yes.
What's your take on this?
Look, let's take a look at even the security challenges we have in Nigeria today, and you begin to wonder, where are the funding for all those weapons? Where are they coming from? Different kind of weaponry, has found its way into Nigeria, coming from the borders and all that. But at the end of the day, this you require huge funds, to procure some of those arms and ammunition that are being used for terrorism, bombs and all of those all over. I think we should be in a position to take a deeper look at where this funding is coming from and how these funds, find how the funds, especially from the official market, will find its way into the black market and ultimately end up somewhere with a view to laundering it ultimately. So we must. It's just a personal opinion. I believe strongly that even if you can reduce to a large extent, the sources of these illegal funds that gets into those who are behind terrorism, then you will have possibly even solved the problem by 50%. Just the way our borders, we know that our borders are so porous, and then so many illegal aliens do come into the country, terrorists do come into the country. Do you now say, look, we are not going to do anything about that because there is the right of an individual, free movement under the law? The reality of it is that I believe in the foreign exchange market, there must have been reasons. Don't forget that central bank will have the total picture of what is happening in the economy on the basis of the foreign exchange currency. And so they must have seen some trends. And there is a need. They won't just fold up their arms and then simply say, oh, okay, this has to continue.
Now, do you think that the BDCs can afford this amount of money as capital base?
Well, first of all, let me say this. If I take a look at the BDCs generally in Nigeria, a whole lot of them, I'm not quite pleased with the fact that they are not well structured. And so an attempt to provide a better structure might be, first of all, to increase their capital base. I'm not going to contend whether the capital base is high or low, but the issue is if there are challenges, I think the stakeholders should have engaged the central bank. And the House of Rep and the Senate, for instance, I'm sure there will be access to better information, regarding their engagement with the central bank.